let's go across. We have Mr. Kamlesh Gandhi, Chairman, Managing Director at Mass Financial Services. Again, it's one of those smaller NBFCs, sharper growths, but really the peg which stands out for me is MSME stress. Bajaj Finance indicated some part of that in their commentary. Mass Financial has indicated that the stress cycle is nearing an end. Let's try and get a sense as to where we are at in terms of that piece. Good morning, Mr. Gandhi. Always good speaking with you. Let me, sir, start off by understanding from you where are we placed in terms of MSME, and over the last year as well, we've not seen a material impact on your numbers. Whether we talk GNPA, whether we talk NNPA, whether we talk credit costs. Why is that so? And what's the outlook like on asset quality going forward? What changes?
Thank you and good morning.
Good morning.
As I shared earlier also, and I think we have been sharing this since last 6 quarters now, that we have to be very cautious in funding to MSME. And if you say that historically we have maintained a growth of anywhere between 20 to 25%, pick up a mean of around 23%. But since few quarters we have calibrated the growth to say anywhere between 17 to 18%. So that caution was on those lines where we saw MSME over leveraged and had tightened our credit screens accordingly. And the credit quality, what you see, is the result of the same. And as we always maintain that we'll prioritize profitability and quality over just the growth. And that is what was demonstrated over last 4 to 6 quarters.
And Mr. Gandhi, what's the sense? Why have your numbers remained largely unaffected while there are certain other pockets in the industry where there is stress?
If you say, we also say we saw a slight uptick in our GNPAs and NNPAs. But as I shared that we calibrated the growth to an extent where we could get eligible demand. And given our size and given our network and distribution strength, we could maintain the reasonable growth in AUM without disturbing the quality of the assets. And if you see that this has been the way Mass has been working over all these 3 decades, even during COVID, when industry was hovering around 7%, we are hovering around 3%. So this has been the hallmark of the company over all these 3 decades to maintain the quality of the assets even during the trying times.
So Kamlesh, your investors would want to specifically know that should one expect structurally higher volatility in early DPD but better yields? How is it that you plan to manage that trade-off?
See, in the current situation, volatility in the higher buckets is given. But how you can manage your GNPAs over a period of time through effective collection mechanism and, of course, extending credit where it is due, that is very, very important. So we have never believed in trading on yields with the quality of the assets. We always believed in extending credit where it is due and charging the right risk-adjusted premium. And we have demonstrated this in last quarter too. And as I shared, have been demonstrating since last 6 quarters. After this challenge has come, this industry has faced the challenge since last 6 quarters as far as MSME is concerned.
So should one expect the third quarter sequential growth to accelerate to 5 to 7% and return to a 20 to 25% annual trajectory then?
Yes, we have always endeavored on those lines, but we have made it very amply clear that we are the company who will not determine growth upfront. We'll go to the market, give our best, to do the best as far as the extending credit where it is due, and then try to pick up the growth. But given the current scenario, we see things improving. And if you see the Q2 growth over Q1 was at around 4%. What we see that we might see an increase in that.
Mr. Gandhi, this 20-25% growth that you're guiding for, at least FY26 for H2 is what you're penciling in 5 to 7% QOQ. Give us a sense now in terms of structurally, is this looking like a 2-3 year growth story in terms of 20 to 25%? Does it give you that confidence? And what has changed on ground that gives you that confidence to grow at that rate?
See, at Mass, we always think about medium term and long term. So while we always evaluate our working on a quarterly basis, but this is not we frame our strategies on. But if you say the medium term view, maybe 3 to 5 years view, we are very confident that the trajectory of 20 to 25% will be maintained. I was sharing this on the other day on an analyst call that if we take a long period from 15 to 25, we have and after facing number of headwinds that we all know, Mass registered a growth of around 22% in its AUM. So while the history speaks of itself, we are quite confident that in a medium term, we'll be in a position to maintain anywhere between 20 to 25% of the growth. And secondly, on what makes us confidence is slowly increasing of the eligible demand. First, there is a difference between demand and eligible demand as a lender. So demand was always there, but we are struggling for eligible demand, which is slowly and gradually improving.
Mass rural housing, that's going to you suggested that that's likely to list in the next 3 to 4 years. What are the triggers going to be like? What's the AUM going to sit at by the time it lists? What's the kind of ROA, and give us some metrics as to what to expect over the next 3 to 4 years to track that one, because if it has to list, there'll be huge value unlocking.
Very true. If you see, talking about our housing finance company, we are into affordable housing space with average ticket size of less than 10 lakh rupees. And here also what differentiates is that our net NPA is less than a percentage. It's around 0.69%. And as you very rightly remarked, that we are planning to list that also within coming 3 to 5 years, a year here or there. But we'll be close to around anywhere between 3 to 5,000 crores when we plan to do that. And given the positive macro sentiments and good tailwinds, we would say this company growing anywhere around 30% plus, and that should take us to that number what I shared with you earlier, and that will be the right time to take it public and unlock the value for the shareholders of Mass Financial.
And Mr. Gandhi, last question with regard to fundraisers. You're currently obviously sitting at very, very strong capital adequacy, near 25%. But if you grow at 20 to 25%, when do you expect the next fundraise, if at all? Or do you believe internal accruals will take care of that? Because your ROA is closer to 3%. So trying to get a sense.
I think we raised our capital last year in June 24. We raised 500 crores. And we see that up till 20,000 crores, we are very nicely placed in terms of capital adequacy. So I think by the time we reach 20,000 crores of AUM, we will be looking to raise another round of capital.
Okay, Kamlesh, great having you on the show. Thank you so much for your time today.